Hello everyone. Can you hear me?
Yes, we hear you.
Thank you. Hello everyone and welcome to Deep Tech Talks, part of Deep Tech MEA initiative powered by the Global Innovation and Entrepreneurship Company. My name is Sarah Aliwat and I'll be guiding you through today's session. Deep Tech Talks is a regular online series designed to inspire and engage people by connecting government, industry, academia, and startups in meaningful conversations that shape the future of innovation, covering both business strategies and technical breakthroughs. The series explores how emerging technologies from AI and biotechnology and quantum computing are advanced materials are transforming industries, economies, and societies worldwide. These sessions are held every Thursday at 6 p.m. UAE time, bringing together experts to discuss the technologies and trends shaping our future. Today, we're excited to host a new session on the theme Why Corporate Ventures Capital is Important for Emerging Markets Growth. We are thrilled to be joined by Nada Shaheen, the Managing Director of GB Ventures and the first Egyptian woman to lead and manage a corporate venture capital fund in Africa. Together, we'll explore how CVCs are driving innovation, fueling startup ecosystem, and accelerating growth in emerging markets. Now, I'm delighted to hand it over to Nada Shaheen to dive into today's presentation.
Thank you so much, Sara. Thank you so much for you and for Deep Tech and for having me today. Uh, Good evening, everyone. This is Nada Shaheen, the Managing Director for GB Ventures. I want to give you a brief about myself, and also I would love to know all of you by the end of this session. Um, I would also prefer to have like a very interactive session as well. So I will be happy if anyone like want to engage by their thoughts or questions during the session. I have been part of the entrepreneurship and startup ecosystem for 12 years. Mainly, I started my career in Egypt as an entrepreneur myself and founder for many startups. And then I joined different entities to support startups in Egypt, like Central Bank of Egypt, and also private corporates. And now I'm managing GB Ventures, and GB Ventures is the corporate venture capital arm for GB Corp. I guess if there's any Egyptians are attending, they are well known of GB Corp. It's one of the largest corporates in the automotive sector, with the legacy of 80 years in this sector in Egypt and Africa as well. And 4 years ago, I joined GB Corp and I designed a corporate venture capital arm for the group, as we have this diversity in the sectors. So I will like talk about the case study and what we did and how we created the corporate venture capital in GB Corp in detail during the session. But mainly today, I want to highlight I have been like 4 years involved in the African market and several emerging markets, discussing how important the corporate venture capital is. And for let me share the presentation so you can. I want to make sure you can see my presentation. Sarah, please could you confirm?
Yes, I can see.
Oh, okay. So first of all, why I chose this topic today, because I have been in the startup ecosystem for a while, And maybe we are all very well known of the traditional VCs and the traditional model of the VCs. And lately we have been like introduced to the venture builder, the venture studio model as well. But for Egypt, maybe Africa and the emerging markets, it's very rare to hear about CVC. Maybe for the last couple of years, it's been like the sweet spot of the CVC, and people started to focus more on the CVC model. And I'm happy to be part of this movement. And being involved very closely to this ecosystem, it makes me feel and see how important the corporate venture capital is, not only for the corporate, not only for the startups, it's for the economy, for the country's economy as well. So let me take you through what is like the CVC and what is the model for the ones who might not very well known of the CVC. CVC fund is a traditional VC backed by a corporate. So it should be like backed by a corporate. It's like the main thing, and it's the main LP in the fund is the corporate itself. And the difference between the CVCs usually and the normal VC is it's very strategic fund. We don't invest unless there is a strategic appetite that like encourage us to invest in these startups. So it's not also for the ROIs or the financial returns. Most of the time, we focus on the partnership and the impact and the outcomes of these investments. We focus on how we can work with these startups, how we can be close to their innovation, their talents, and what they are doing, and the agility that they have. So it's more or less impact driven and strategic driven fund. And when we compare what we have and the ecosystem and the MENA region and Africa, we see like it's like 1% compared to the international market and the global market in the corporate venture capital investments. And when we focus on what we have in Middle East and Africa of success stories for corporates, it was like for me at the beginning when I was like managing and trying to design and figure out what is like the best model that suits the nature of the corporates in Middle East, because it's totally different than other countries. So it was hard for me to find a successful stories or other stories that I can like consider taking out a role model in my journey. So, but also when you like compare it to the international landscape, maybe Japan, Singapore, and US, you find that a lot of corporates are achieving a huge success with their CVC arms. And later, when we started as GB Ventures and we started to invest ourselves, we saw that impact actually, and we saw uh, how this arm is like investing and enhancing and serving the whole group, not only um, it's not only just an investment, it was like serving and very strategic arm for all the businesses that we have. So that was like a reason for us, it was enough reason for us to create the example and to help in the awareness and raising the awareness in terms of corporates to start and encourage other corporates to start their own corporate venture capital arm. Sorry for that. I guess it's been delayed. Sarah, I want to ask you if we can have like a round of introductions later.
Introductions for what?
For the attendees.
Yeah, sure.
Okay. I guess my screen has an issue. Please, I will like cancel my share and reshare it again. Okay. And here, I was talking about how strategically we invest in corporate venture capital, but also corporate venture capitals are really strategic for the country, the continent, the corporate itself, for the startup itself. So we have some strategic values behind corporate venture capitals, and which is the first and one of the most important things in these strategies is the market access. So sometimes when you have like a company working in certain industry, like maybe automotive as an example, as it's our example, sometimes you have like your own share in the market, but also sometimes there's a new trends that always growing very fast, maybe sometimes more than and faster than the corporate main vehicle. So here, when I started to like discuss the main business and how people doing business in terms of the traditional way of doing the expansion, the market expansion, and these things, I noticed that usually they have this gap. They know nothing about what's happening in the startup ecosystem, and they know nothing about the new startups and what they are doing. There's an isolated islands between the startups and the corporates most of the time, and there's a huge gap, but also there's a lot of common and similarities, but because they have like different languages and also different mentalities and mindsets, they never speak together or they never understand each other. So I started to create this integration strategy to align what the corporate has and also what the startups needs. So we started to have a better perspective and visibility on the ecosystem and on the market that we are already involved in. And I started to also see what are the needs for the startups from the corporate resources. So what we had the conclusion that startups, they have the innovation and the agility, and corporate has the expertise, the resources, the money, and the power as well. So when you like find a sweet spot between these two entities and ecosystems, and you find like a mutual benefit out of this cooperation, here like the magic happens. The startup can find resources so they can accelerate their growth, and also the corporate finds new innovations and new ways uh, to like contribute sometimes in different markets, having more insights and data and information about different categories or segments for their customers. Sometimes also it achieves a new positioning with the new customer segment they were like desperate to target, but they never had this common language as well. So sometimes they could achieve this through the startup and the startup integration. So when I started the corporate venture capital, I was like trying tries and errors, trying different strategies. And one of the most efficient ways and strategies that we applied here was like the piloting and the integration. Piloting and integration, let me take you through this in more details. piloting, we started to find startups who are already mature, and like not that mature, but let's say Series A level, and working on the same sectors. I will give you an example. There were like a startup working in logistics field, and we have our logistics arm and also commercial vehicles arm. So here I started to understand what are the business needs internally in the company and what are like their vision. And also I know very well what these startup providing for the market and how they can enhance and represent our brands in the market. And I started to introduce these startup to the company business lines, the logistics and the commercial, and trying to bring an integration model between these two ventures, by offering a commercial agreement with the partnership and integration model. Also, it has this benefit and win-win situation for both of the sides. And then at the beginning, maybe we faced this struggles with the mentality and corporate can deal with a small company, but later when we resist the relationship and we pushed the integration strategy, we find like the benefits and what's happening after this, and we started to collect the ROIs of what the ROIs out of this integration. So we started to duplicate this model with other startups in different sectors. And piloting, usually in the VCs, is the normal VCs, they do the normal due diligence that I'm sure that everyone here might heard of, the due diligence process um, and how we usually do the due diligence process. But in the corporate, at the beginning, it was hard for the corporate to just look at the numbers and looking at like the only presentations and sheets and data room. It was hard for the corporate to be convinced over these data. So we also created the piloting process. So we work closely with the potential startups to be in our portfolio, to have like a relationship, closer relationship, testing the synergies between the startup and what we have internally, testing the potential of the business model, testing. Sometimes there are like perfect and amazing ideas, but they are not working with us, or they are not aligning with our vision. So it's hard for corporate venture capitals to invest in such a startup because only he's profitable, or because, as I said earlier, we we matter, and we are strategic driven and synergetic driven. So it should be like all the reasons to invest with these startups. It's not only financial or ROI return. Uh, Actually, I would like, if anyone has any like questions, contribution, I would love to have more engaging session. I don't like to just speak and tell what I have. So please feel free if anyone has any questions so far. Sarah, I can't see the screen, so if you can see it, you can tell me if there's anyone who wants to open the mic and say anything.
Yes, if anyone wants to say anything.
Hello.
Yes.
Hi, Nada. Thanks for
Hi.
the session and for requesting also to give an introduction of everyone and allowing the questions. So my first question is, would GB CVC be open for any type of startups or just specific startups that belongs to GB business lines in general?
Okay. Thank you. It's a really good question and takes us for a very good point according to the CVC mentalities. Usually, there's there's two different ways in GB Ventures, and we only focus on three main sectors, which is fintech, logistics, and automotive, based on the company and the corporate business. And corporate venture capitals, as I said, it's strategic fund. So usually corporates prefers to invest in startups who works in their industries. So for many reasons, the first reason is we want to have like the maximum benefit from these startups. So we want to serve our main business and we want to grow our main business. And the second thing is corporates, they are like experts in this sector, they have been like 80 years, sometimes it's a decade. So they could contribute better and give more efficient resources and information and data and market strategies for the startups better than any other industries. So I can't imagine GB Corp investing with health tech. We never had this experience or expertise in this field before. So what is the impact that we are going to add for the startup and health tech when we are investing with them? But compare this to an automotive business or an automotive startup, how we can push their growth and their limits in the market. It's huge. And we care a lot about the impact that we are providing and we are offering to our startups. So most of the corporates are sector-based funds. When they create the fund, they start at least with their industries, but also there are a lot of other corporates who wants to contribute and have more insights in different industries. So sometimes the corporate working in telecom, but they want to have an insights and better information and idea on the AI. It has an indirect relationship with their industry at the end of the day, but they don't work in this sector as well. So it has the two sides, the indirect and the direct strategy. I hope I answered your question.
Thanks for the perfect answer.
Thank you. So anyone else, or should I go for the challenges?
Good
If
morning,
nobody
Nada.
else has a question,
I heard someone. Hi, good morning.
Uh, First of all, thank you very much for this introduction. And I have a question, which is, what are the main metrics or key metrics you prioritize in your CVC journey? And are you interested in just Series A startups, or you can take in consideration other levels like pre-seed or seed levels? And as an extra question, are you interested in edtech startups? Thank you.
Thank you. Thank you for the question. Actually, there are three questions, but I'm going to answer it very quickly. For the level, we can go from seed to Series A, but pre-seed, we tried pre-seed, but the gap, let me here speak about the gap between the corporates and the startups. We tried actually the early stage startup when we started, but corporates usually has untangible, or let me say it in a different way, they have over expectations and they have KPIs that could be very harsh for the startups at the beginning. So early stage startups, they feel usually when they get involved with the corporate. And usually I advise the startups, the early stage startup, not to go to a corporates, because you are still immature somehow in most of the cases, and you don't have a solid business model yet. You are in the trial and error process. Sometimes some startups like lose their vision, trying to um, just meet the expectations of the corporate. So they lose their vision eventually. So it's not the perfect scenario for the startup or the corporate as well. Usually, we prefer to go with other VCs. We co-invest with other VCs. So, because at the end of the day, investments is not like the core DNA of the corporates. So sometimes they need validation from other VCs because it's their expertise as well. So that's why we are starting from seed to Series A, according to how strategic the idea is to our business. And maybe in rare cases, we can do pre-seed if it's very, very, very strategic to our company and we want to have it from early stage, and maybe we can take a bigger stake of the equity and later we can dilute it, if it's like that, if the potential is really huge. For edtech, actually, when we started, we decided to add edtech to our sectors, but later, when we got involved with edtech startups, we have seen that we are not that impactful for them, so we didn't proceed with edtech anymore. We just decided to focus on the industry that we are experts in. For the key metrics, we are like uh, any venture capital. We look for a good founder, a good team, extraordinary idea that adding value for the market and the consumer, for a successful and scalable business model. And on the top of these criterias, we look for a company could has like synergies between what they are offering and what we have in the main business. So these are like the main criteria usually. I hope I answered your questions as well.
Thank you. Thank you very much, Nada. Very
Thank you.
helpful.
Thank you. So let me go with the challenges.
Excuse me?
Yeah, Sarah. Yeah.
Yeah,
Mhm.
there's also Farah Boras raised her hand. Maybe she has a question too.
Okay, can we take it after this part?
Yes, sure.
Okay. So sometimes when I talk with passion about corporate venture capital, people thinks that it was like easy and it's it's a world, a pink world actually, but it's not. It has its pros and cons and its challenges. And as we all know, if any of you had the chance to work in a corporate, you can imagine that you are trying to convince your corporate board, and it used to be a family business, to invest their money with youth and startups and new ideas and innovations, and maybe like it's something out of their comfort zone at all. They never heard of it before, so it was kind of very hard uh, to grab their attention and saying that yes, you are an expert here and you did a great job, but you need to diversify your investments and to have a portfolio out of startups so they can accelerate your growth, and making them feel they have to do it. It wasn't that easy. So the bureaucracy, and actually this was like the first step, uh, convincing the people of the corporate venture capital and idea internally. And then the structure of the corporate venture capital, it's also very tricky. And I'm glad that I had the process and I learned the hard way by trying and error different models. So at the beginning, as a corporate venture capital, it's a very small entity and you need the corporate support because you are built and you are here because of the corporate itself. So you can't ignore how important this corporate for you as a fund. But sometimes they are too controlling and they are too involved. And this by time, it could be a disadvantage by time. They are too involved in the decisions and everything. And the bureaucracy that they have in the corporate, it's not aligning with the startup ecosystem and what you are doing with the startups. So sometimes it takes a lot of time to take a decision. Sometimes it take like months to say yes we are investing or no we are not investing. So it's kind of waste of time at the end of the day. And you know that startups usually a day matters a lot. It's not like the corporates usually. So that's why later we decided to have a separate structure, but yet it's not isolated. It's separate, but yet has a very good relationship with the main stakeholders. And we created a board out of the board members, but also we have an IC to take like a faster investment decision making. And here also I was in Nigeria 2 weeks ago, and I noticed like the same problem. I was in a panel with one of the banks, the main bank in Nigeria, and they have their own venture capital arm. And one of the audience was like a startup, and he was asking one of the representative from the bank, corporate venture capital, about the process. It takes a lot. 6 to 12 months is like optimistic period to have your license or to start your business or partnership with the bank. And banks also, they considered as a corporate venture capital when, because the entity itself it's private, but it's a way complicated than the corporate model as well, because it has a different hierarchy and different structure, and it's a way complicated than the corporate usually. So the bureaucracy of the corporate sometimes affect the fund itself. That's why I always advise to have a separate entity with separate decision making, but also a good relationship with the corporate stakeholders themselves, so you can have the privilege of the resources that you have from the corporate. And this also, sometimes when you invest with the startup and later you are trying to work with these startups, sometimes the corporate processes could affect the startup growth. But that's why we are always trying to put it in a partnership and commercial relationship, so we can accelerate the process internally and externally as well. So we are very involved when it comes to our startups working with the company itself. We are trying, usually the team who are responsible for the corporate venture capital, they are trying to change the mentality of the corporate in general all the time. You can't say, or you can't complain all the time from the corporate mentality, and it has its own challenges, but you have to contribute with changing these mentalities by proving for them how important these are for the company itself. And actually, this was our experience internally. It wasn't easy to change the mentality, but it's not impossible. It happened. Yes, it took us like 2-3 years to have this stability, but it's not impossible. That's why I would love to tell everyone that there's a hope that the corporate mentality changed a lot with time, and not only with time, with having a successful um, cases and relationship with the startups. And this actually needs as a commitment from the startups. Sometimes startups should show the commitment and the maturity so the corporates can take them seriously, because it's not an unfair idea from the corporate that startups are lazy or sometimes they are not mature enough. So startups actually, they have this in their responsibility to prove the opposite as well. And that's why I always try to translate the language between the two ecosystems. Um, because sometimes also the part of the agility, it's amazing, the agility that the startups usually has, and how fast they can move, they can take decisions. It's amazing to have it, but also sometimes they need to be like, to have the balance between being agile and being mature, and like having a vision and doing whatever it takes to achieve this vision. So I think I don't want to be like unfair for the corporates and the startups, but I think every part of these entities has its own pros and cons, to be honest. Sometimes startups are messy too much, sometimes they are delusional, sometimes they are unrealistic, and I don't like the extreme. It makes the gap bigger than it should be. But when you have this conversation and this relationship between these two different worlds, sometimes they're like the results is beyond the normal relationships. Uh, yeah, now I can take the questions, and if anyone has any questions on this part as well.
A quick one, Nada. You said it took 2 to 3 years to change the corporate mentality. Uh, how long did you start? I mean, from the starting point. If it took 3 years to change the mentality, have you started 5 years or, I mean, about the idea
Actually,
about GB Corp
yeah.
itself?
Yeah, thank you for the question. Actually, it was gradually changing. It wasn't like one day they changed it after 3 years. No, we were active and we were like working, integrating startups, investing with the startups. So it was like changing very gradually, but slowly. So it wasn't like after 3 years they changed what suddenly. No, it was like very gradually. And even when it's very conservative, this didn't lead us back to not doing the work. We were like trying to prove our vision, trying to prove how strategic this fund for the group is, how strategic the relationship between the startups and corporates. So it wasn't like uh, one day they changed their mind. No, it was gradual, and we were like updating and reporting what's happening and how we are affecting the company itself, growth and businesses all the time.
One more question, if nobody else has a question. So, how usually do you get introduced to these startups? Do you cooperate with other entities that introduce you to startups? You co maybe governmental activities, initiatives by the government?
Yeah, great question. Thank you for the question. Actually, we do a lot of activities in terms of providing the pipeline. We have a wide network in the ecosystem. We have partnerships with acceleration programs and other VCs. So I said earlier that we prefer to co-invest. So we have a very good relationship with the ecosystem. So they usually provide us, and they know very well the criteria that we are looking for. So they always provide us with recommendations and startups. myself and my team, we always look for new startups, and we search and we go see who are like the new startups working in these sectors, and we do our own screening, reaching out to the startup founders and scheduling meetings with them. And also I attend myself and my team all the demo days for the startup pitches, especially if it's focusing on the industries that we focus on. So yeah, it's a lot of activities to have a pipeline, and also we have agreements with venture capitals. We do co-invest with them. So when they have a good deal that we meets our criteria, we go and invest together, you know. Thank you for your question. I hope I answered as well. Sarah, if there's any other questions, I know that there were 2 questions before we started this part.
Yes, there is also Abdul Latif Aliu. He wants also to ask a question. He raised his hand.
Yeah, please. Can you please, when before asking the question, just say your name so I can know, because I don't have the screen. I
Okay,
don't know the
Nada,
names.
can you hear me very well?
Yeah, I can hear.
So this is Abdulatif Aliyu, and thank you for the discussion thus far. I just want to take you back to your generalization of how long it takes in Nigeria for 6 to 12 months. Maybe perhaps that's just from one entity, but I think you need to get like a survey to understand what's actually going on there, just to draw your attention to that. If you have a very solid data to back that up, then you can generalize that.
Okay. No, I wasn't generalizing. And this was like based on my discussion with a lot of people there. It takes time, even in Egypt, it takes time for the fintech license. And this is actually the normal duration. It's not generalizing that things takes time. It was like the duration to be licensed as a startup, as a fintech startup, you know. And we have more or less the same time duration in Egypt as well. So it's not me generalizing the idea of it takes time. It takes time with the license part, you know. Thank you.
One more question from me, Nada. This is Bassem Bush, by the way. So I asked a couple of questions before, but since we did not have the time to introduce, so have you been aware of governmental initiatives like the one in Egypt from the Ministry of Higher Education, one called تحالف وتنمية. This is more of calling for VCs and the private companies to cooperate with the government on building startups all over the country. Have you heard about it, or would you like to be involved in that?
Okay, actually, we can talk about it later. Yeah, I heard about it for sure, but I didn't get involved yet. So we can have a conversation about it later.
Thank you.
Hello, my name is Farah, and I hope I can ask my question finally.
Sure.
Well, as we are a biotech, deep tech startup, and we are working on research and development, I know it's not the same for all, but as a startup who is working in research and development, as you know, it will take time for us to show the results, etc. So how do you approach those kinds of startup? Because we are working on drug safety, drug repurposing, also therapy, similarities in therapy, and I'm wondering how you are approaching them and what's your like added value for that. I mean, thank you.
Okay. Thank you, Farah, for your question. For the biotech and this sector, it's not our main sector, but let me answer your question maybe from a normal VC perspective, how they can find the early stages. I guess it's kind of on your responsibility as a startup founder sometimes to reach out to the acceleration programs that could put you in contact with the VCs later. And also there are a lot, I don't know where are you located, but sometimes the acceleration programs and they do these kind of partnerships with corporates, which could be potential maybe sponsor for you and what you are doing. So sometimes starting with the right partner, acceleration program, or sometimes it's a corporate acceleration. It's on you to choose which program could be more beneficial for your startup more than the other.
Okay, I'm just well to tell you that I'm in Algeria, in Algiers, based in Algiers, and actually we didn't find any program accelerator in MENA region, MENA, where they were focusing on drug repurposing or drug safety, or even like in because we work at, like, we are developing also an AI solution where we are trying to have a better formulation, to have a better compatibility with the principal active. So it's really, it's a niche, I could say. We can find that in more in Europe or in US, but not in MENA region. Actually, I didn't cross any of them.
Yeah, actually, yes, you are right. We don't have a lot, but actually, I know a couple of people in Algeria, and they are doing an agnostic acceleration programs. I can put you in contact with them, and also there are like global entities like 500 Global, some of the global ventures, like they are agnostic. They are not focusing on your domain, so they are not adding value to what you are doing in terms of the technical part, but they could be a start for you to put you in contact and in partnerships with other companies, you know. Could be beneficial to start with someone who is doing an agnostic programs. They are not against having a biotech, and also there are a lot of places they are agnostic, and you might be eligible for their criteria as well.
Thank you so much.
So
Thank
you
you.
don't have to only focus on the sector-based accelerators
Okay.
or initiatives. Can go for the agnostic ones, so they can put you later with their network. Either it's a universities, labs, corporates.
Just to inform you also, we already signed a contract with the contract partnership with the CRSP. It's a center of research in pharmaceutical science in Algeria. So we will work for in silico test, sorry, because we already developed a platform where you can make your in silico test.
Okay.
So, thank you.
Yeah, that's a great step actually, because in your domain and in your sector, you should have this academia part and also regulatory part, and you know, for sure, it's very important step. But when I say like acceleration programs or venture capitals, to push you towards the fund side and the market contribution side.
This is what we are looking for, actually.
Yeah,
We
100%.
really need it. Yeah.
Yeah, you need an agnostic places. Don't focus only on the sector-based initiative, or it could be it could come in a more mature stage, but now you can start with the agnostic entities. Thank you. So anyone else, or this is actually like the last thought of what we are our session today. So the CVC potential in the emerging markets. But before this, let me tell you briefly. I told you already about GB Ventures and what we have, but let me take you through it very quickly. So GB Ventures, as I said, it's the corporate venture capital arm for GB Corp. Mainly, we are focusing on mobility, logistics, and fintech. And any other industries could be complementary to these sectors. What we do two things. We do integrate startups with the main business, and we do work closely with the startups. And also we invest with startups in these sectors. As I said, from seed to Series A, sometimes in a more mature stages, in rare cases, in early stages as well. Um, what's our goal and our ambition is to have startups in our portfolio that we can add value to them, and also they can add value to our business as well. And now we have 5 startups in our portfolio. One of them is very close to a unicorn, so they are doing good. And also, I have a lot of examples for corporate venture capitals who has their own unicorns. So sometimes when people speak about corporate venture capital, they don't link the potential growth of the portfolio to the other venture capitals. Maybe the percent is a little bit lower, but there's a unicorn backed by CVC in many industries. So it's a very good sign, proves that corporate venture capital is very important as well, because it proves that they can push the startups towards their growth and potential. So that's why I think, and not only in emerging markets, but in many markets, corporate venture capital, as we know, that corporates has all the resources. They have the expertise, the money as well, and the market insights and knowledge. So it's very important for the startups. Sometimes it's more important than money, that the resources the corporate venture capital offers. It's a way important for especially early stages to help the startups and put the startups on the right direction. Also, we can say that to attract a global and international investors to come and invest in your market and in your country and your local startups, you should show the potential first. And I see it a good way to attract the global and the international investors as well, by investing in your own country startups. It enhances the economy in a way, and which is the corporate economy as well. So you contribute indirectly in enhancing the economy, and also you are attracting other investors to come in and explore the potential cooperations and investments in this country. And also, it's not only investments. Sometimes it highlights your market. So sometimes startups from different countries want to come and explore the potential in the market. So let's take Egypt as an example. Egypt is like a huge market. So, but sometimes startups from Europe or US or other African countries, they have no idea about the insights in that market. But who has these insights? It's the corporate. So sometimes it could be a very good asset and tool to help more startups to come in and integrate and actually work in your economy and your country. You are like opening the gate for different companies to come in and explore this market as a potential market for their businesses. So that was like my insights, being very involved in the ecosystem, mainly in Africa. I was really happy being here today. And yeah, I would love to hear more from your side if you have any questions or any insights on this ecosystem, corporate venture capital. I would love to hear from you. Thank you.
Thanks a lot, Nada, and thanks.
Thank you very much, Nada.
Thank you.
So, Nada, if we would like to contact you later, how can we do that? Can you provide us with your email, maybe?
Oh, sure. Yes, we have chat here, so we can put my email.
Nada,
Okay, I
one more
think we
question.
are just on time. Yeah, for
Yeah.
sure, Farah. Yeah, for
Please,
sure.
thank you. Are you accelerating like startup like us or not at all? I mean, like in research and development, or do we have any cohort in that segment?
Okay, unfortunately, at GB Ventures, no, we don't do acceleration program. We do have partnerships with other acceleration programs. That's why I told you I can put you in contact or I can refer a couple of entities. You can find synergies between you and them globally and actually, yeah, mainly globally. Farah, you are muted.
Yes, sorry. Yes, thank you. I wrote you down that yes, if you can put me in contact with them, it will be really great for us. Thank you so much.
Okay, thank you. Okay, I guess we are running out of time. Thank you, Sarah, for
Thank you, Nada, for such
hosting
an
me
insightful.
today. Thank
You're
you.
welcome. Thank you, Nada, for such an insightful and inspiring discussion. And to everyone who joined us today, we truly appreciate your time and participation. So this has been Deep Tech, an entrepreneurship company where we explore the technologies and ideas shaping the future. We invite you to join us again next Thursday at 6 p.m. UAE time for another Deep Tech Talk session. Until then, I'm Sarah Aliwat, and thank you once again, and we look forward to seeing you at our next session next week. Thank you. Have a great evening.
Bye.